What's up, you guys? Mighty Mike here, and I'm super excited. In today's show, we're going to dive into everything credit repair. Have you ever gotten a random friend request from somebody and they were like, hey, you want to fix your credit? It's, only 14.95 or whatever a month, and we're going to help you out. Well, guess what? I got somebody, not one of those guys, but somebody on to explain to us if is credit repair an actual business? Is it something that can actually help us? I don't know. Stay tuned. We're going to find out. So, the big question is this: how do you find the home of your dreams around the people and places you love in the beautiful city of Orlando, Florida? That is the question, and this show will give you the answer. My name is Mighty Mike, and you are listening to the Mighty Mike Show. All right, you guys, I am joined today by the awesome Dylan Shively, is the author of The Credit Files. He's a father, he's a husband, an Army veteran. Thank you for that. With one goal in mind, helping others achieve the impossible, now in 23 different states, and he's been seen on ABC, NBC, CBS, and he was the Emerald sponsor for my brokerage, Realty One Group, with our recent thing that we had going on. So, hey, welcome to the show, Dylan.
Thanks, man. Thanks for having me.
So I always like to start out the show and just kind of find out a little bit about my guests, so we know that you're not just some kind of drone. Elon Musk didn't create you, and now you're fixing everyone's credit. Tell us a little bit about yourself.
Yeah, absolutely. I mean, the brief description honestly describes it all. I find myself as kind of more of the boring person. But before anything, I did serve 6 years in the Army. And after I got out of there, I did a pretty much life of sales. I was in car sales and I did retail sales. I was actually in Verizon. I had an opportunity for a managing partnership, so I was able to buy one of their locations, which was really cool. And kind of just that quick segue into how I got where I am now is when I was with Verizon and even previous in car sales, I noticed there was a lot of people that would come in with a ton of hope, looking to walk away with something, whether it was that new car, sometimes even that pre-owned car, just something that wouldn't break down, or the parent coming in with their 13-year-old daughter that won't let them leave without a new iPhone. No matter what it is, I've seen a lot of people come in with hope. And unfortunately, I've seen so many more people leave disappointed because they either weren't approved for what they were looking for, or if they were looking for that car and they were approved, it was with an ugly interest rate, which cost them a ton of money. But since everybody is taught, sales is taught to be payment driven, they would try to make it make sense in the payment, not realizing the long-term hurt that it would cause. So long story short, for me, when it came into the credit repair space, I was actually my first customer. And I had great credit at one time. And what it sounds like most people go through is when we're young, we make those dumb decisions that we don't think about for the long term. And I did that. So I'm a huge car guy and I love cars. Believe it or not, right now, the car that I own now is the 42nd car that I've purchased since buying cars. I know it sounds nuts. I hear all the time, hey, if you would have taken all that money and put it into real estate. And I know that. But, I like cars. I like collecting cars. I like having multiple ones. And when I was working that job, I mean, it was like a kid in the candy store. So, you put me in front of cars, these cool trade-ins come in and I'd buy them up and it was great. But what happened was, being commission-based, when things got slow, my bills were still due the same time every single month. And long story short, it got really bad. So I went and I started Googling things, trying to figure out what can I do? How can I fix this? And then a list of like credit repair and debt consolidation companies popped up. And I picked the one that I thought was the most popular. Unfortunately, there was a expectation going in. And then when services were rendered, it was not anything that I was told. And it really pissed me off a lot because it cost me a lot of money. My scores were only going down. I had to consistently reach out to that repair company, to hear about my results. So, and if I didn't reach out to them, I'd have no idea. And it was just really bad. So
Mhm.
that's kind of what sparked the interest with me being my own first customer. And also now fast forwarding in that time, I have a growing family. I'm getting a home. I was overpaying for things. I was going into debt. So it was bad, but there was a lot of why behind I wanted to fix it because I had
Mhm.
somebody that was mentoring me at the time that taught me the importance of credit. So when
Yeah.
I hurt myself, all I could think about is how do I get out of it? And I didn't care what I had to do. I just wanted to do it, not even so much for me anymore, but for my family. I need to house
That's
my
good.
family. I need to make sure that we have food on the table and, that my family's taken care of. And that's how I had to do it. Believe it or not, credit had so much more power than I knew at the time. I just thought it was for buying cars I couldn't afford with cash.
Well, I'll tell you, there's this thing in any educational space is the epiphany bridge. As one thing I've noticed is like anytime you're trying to teach a child, like I've taught a lot of kids. I was a scoutmaster, I was a leader in my church, and there's this epiphany bridge. And as adults, we're no different. We're just more skeptical,
Yeah.
right? And so a child, you could teach them something and they just like get it. They're like just almost immediately. You teach an adult something, and there's all these question marks of like, but why, but why, but why? And so the thing with credit that's interesting is that almost everyone, unless they had an adult who was like, got them a credit card, made them use it, made them pay it, almost everyone has dealt with bad credit, haven't they?
Yeah, absolutely. And one of the I'm a huge like analogy and quote person. So for me, when it comes to that, I like to think of it like this: we only know what we're exposed to, right? So
Right.
until somebody has put a different perspective or a different experience on it, we only know what we're taught and we don't know what we don't know. So
Mhm.
I feel like if anything, my job is to expose the common credit myths and teach people how to understand credit. So it's not just them working with us for us to fix it, but to
Mhm.
actually show them, hey, this is what we've done. This is why we chose to go this way. And here's what you do to prevent this from happening again. Obviously, that'll be another part of this, but
Yeah.
I think the education piece is huge.
Yeah, definitely. So let's help our adults that are watching because the kids are playing Roblox or something.
Oh yeah.
All right. So, so the adults that are watching are skeptical. And we've all gotten the message from Facebook or some intrusive phone call or thank you very much, give me your credit
Yeah.
card number. And we've all gotten this, right? So
Yeah.
I know that's not you. So tell me what first of all, let's address that, right? Where does that even come from? Is it because there's not a regulation around credit repair companies or what is that?
So believe it or not, there actually is. There's just if you're not a big enough fish, you're flying under the radar, right?
Mm,
But believe it or not, credit repair is regulated by the FTC. If
mm,
you're big enough, you actually have rules and regulations and things you have to follow. you
right.
know, at least if you plan on being in there long term. If you plan on actually serving people and being moral and ethical and creating a business that is worthy that will carry you into multiple states, we have to be licensed, we have to be bonded, we're regulated by the FTC. And
Mm.
how I tell people how we operate is we're essentially like a lawyer for your credit. You're hiring us to, oh, there's my kids there.
No problem. It's
so
awesome.
so you'll you're pretty much hiring us to be that lawyer for your credit essentially. But
Right.
before we even dig deeper into that, just as a quick backpedal, there are certain times we can't contact you, there are certain ways we can't contact you, but like most small business owners that don't take the time to learn that, they just kind of wing it and go for it and kind of
Mm.
hope for the best, which, as we both know, is not the greatest strategy because you want to be respectful of people's time, their boundaries, and you want to make sure that you're operating your business morally and ethically. Which, again, I know those aren't two common words that you'll hear with credit repair, but for me, you're going to hear me say it often today.
Yeah, well, I appreciate that. I appreciate you kind of going into it and breaking it down. Some people may know this already, but I know a lot of people who have bad credit, they're worried about sharing information, whether it's their social security number and all this kind of stuff. So of course, at the end of the show, we're going to provide all of your information, Dylan, and hopefully people will reach out to you. But let's give away the horse, okay? If you
Yeah.
don't mind.
No, dude.
So we're gonna dive into the nuts and bolts here. So what is it that they normally have to provide in the beginning? If somebody asks you for this, it's a huge red flag.
Mhm. So if somebody, especially if they reach out to you on Facebook, if they reach out to you on the phone and they're requesting the information over Facebook Messenger or over the phone, block them. Don't talk to them. So again, because we're regulated, you have to have 256-bit encrypted CRM, available. That is a form to fill out. So then that way that client's information is safe. Now, technically speaking, even though we're working with a client's social security number, of course, it is required. At least with us, we actually only require the last four. So, there's my hand. There we go. We require the last four. So, when you're filling out information on your behalf for us in our system, we'll only take the last four social. Now, there is a secondary thing, which I think this would be a good topic too, credit monitoring. Right? There's usually they say pay us this, and then you have to pay for credit monitoring. Yeah. Is that, do you need that or not? We'll go into that, but the short answer is yes. The credit monitoring software will actually require the full social because they're going to pull the full reports. But as far as the credit repair company goes, as far as we go, we only need, first name, last name, your current address, email, phone number, date of birth, last four social. The reason we collect that is because we want to verify it when we're looking at your credit reports to make sure everything matches.
Yeah. And so is this more of like you said, an attorney for your credit? Do you think that it's more of counsel, like consultation? Are you a consultant? Is that pretty much what it is?
Yeah. So I go above and beyond, honestly. We do so much more than the average credit repair company. So most credit repair companies you hire do this. They say, pay us for service, whether that be monthly or a pay per delete option or a one-time fee, however they charge. Pay us for this. And what you're hiring them for is for them to process the dispute letters for you, to analyze your credit report, say, here are some things we find that are incorrect, that are challenge worthy. They draw up the letters and they send them out. Some credit repair companies, and if you're watching this, you're who I'm talking about. There are some credit repair companies that I despise, that they will charge and make a client process the letters and everything. They'll just tell them what to say, but it's the client's responsibility to prepare the letter, draw up the letter, seal the letter, drop the letter off. What are you paying them for anyway? And they actually say, well, you're paying us for our knowledge.
Well, I'm gonna put you on the spot here, Dylan, because
please do.
I fixed my credit and it was difficult. There was a lot of, hey, I'm going to charge you and I'm going to send out letters. And I asked them up front, what are you going to do for me? And all of those, the things you're talking about, they would do. But then I went on Credit Karma, and I'm not trying to sell them because I've used a few of the different apps. Okay. And so I do want to know what you think about them and everything, but they actually, you click a button and they send a dispute letter for free, I guess. So, but what happened was, and just so I can be fully transparent, months went by, it was still on there. And I had no idea if it was ever going to come off yet or not. And so I ended up calling and just paying it because it was, even though it was a fraudulent thing from an ex-wife's baby mama passed, I ended up paying, it was only $120. I was like, I'm just going to pay it. Yeah. So what do you think about that? Is that, how does that compare?
All right. We have multiple answers in this one.
Okay.
So the first thing we're going to talk about, and I'm going to be respectful of the time because I can rant about this for hours. The first thing we're going to address is Credit Karma. So you specifically being in real estate will understand this analogy. So Credit Karma to the credit repair industry is what Zillow is to the real estate industry. Okay. So, when you have that client that comes in, especially when they're selling and they're like, Zillow says my house is worth X, and then you got to break down why it's not accurate. Right. So that's what we do with Credit Karma. So since we are in the real estate space right now, I'm going to keep it relative to that. So the first issue that I have with Credit Karma is that they only provide you with 2 out of your 3 scores. They give you your TransUnion and Equifax scores, so they're missing Experian. So when it comes to mortgage lending, that you guys require, or the lender, I should say, requires to find out what the client's middle score is, right? So as we know, if a client who's looking at the 3 bureaus has a 650, a 700, and a 750, that middle score is going to be that 700, right? Well, you can't obtain a middle score when you're looking at 2 to 3 bureaus, or 2 out of 3, I should say. Now, my next problem with Credit Karma is when you look right below those 2 scores, you're going to see a little I with a circle, the little information button, and it's going to say calculated using Vantage Score 3.0. Now, as you know, in lending, over 90% of lenders use your FICO scores. Now, okay, Dylan, I get it, but doesn't, Experian for free just give me my FICO score? Yes, they do. They give you your FICO 8 score. And I don't want to lose anybody. I'm about to say a bunch of stuff, but when it comes to lending, there's multiple different versions of your FICO score. So when you're applying for a mortgage, they look at your FICO 5, 4, and 2. And the reason that there's different calculations is because depending on the type of purchase you're trying to make, depends on what they're weighing heavier on, how you're maintaining your credit. So back to Vantage Score versus FICO. The reason that Credit Karma can show you at a 720, but then you go apply for your home and you're actually a 580, the reason that the difference is so big is because with Vantage Score, there are 6 factors that calculate your credit score. With FICO, there are 5. So number 1 contenders, the most influential on both scoring models, is payment history. Payment history is the number 1 influence to your score going up or down. FICO weighs in at 35% influence, and Vantage Score measures in at 40. So there's a 5% discrepancy. Now, that doesn't seem like a big deal, but have we ever challenged to say, okay, 35% of what? Or 40% of what? Like, what's the math? How do I know how much a difference there is? Now, your score can be as low as a 300. I mean, for the technical people, there's always technical people. Yes, it could be a 0. You can have no credit, but I'm talking about an actual calculated score. The lowest your score can be is a 300. The highest your score can be is an 850. So there's a 550 point difference that your score can fluctuate both up and down. So when we're saying payment history is 35% of your score, that means it influences 35% of those 550 potential points. So that means payment history controls 192.5 points out of a possible 550. And then utilization is the number 2 at 30% influence. Utilization is how much available, or how much your max spending limit is on your revolving accounts, which is credit cards, versus the balances you're already carrying. For example, if you have $1,000 credit card and you spend $500 and carry over that $500 balance, you're now utilizing 50% of your credit limit, which is risky in a lender's eyes. Right?
What should we be doing? Is it like 28, 30%, no more than 30, or?
So the under 30% is very general, but let's get surgical so that way we can maximize the potential score increase.
Okay.
Surgically speaking, you want to be between 1 and 9%. That will maximize the amount of points your scores can go up just by maintaining your credit cards correctly. The reason that I don't say, hey, 28% or 25% is because that's too close to the line where, God forbid, if we are where we need to be at 25 or 28% and we happen to slip and we use that credit card for gas or for lunch, and now that brings us back over the 30% limit, well, now you're going to see the score decrease, and that can hurt you when it comes to the closing table.
Okay, so let's say I have $1,000 credit limit. I'm spending $90, right? That's my $90. Now, if I pay it off every month, then it doesn't matter, right?
Right. So I'm glad you brought that up. So you can spend as much as you like. The difference here is there is a due date and a statement date. The
Mm.
statement date is the day that it's going to report to your credit report. The due date is just when the balance is due.
Mm.
So here's a situation. If you have somebody who is riding the line, of their utilization, they're almost at the risky level. Now they can spend as much as they like, as long as they pay down to get the balance between that 1 and 9% by the statement date, then that balance is what's going to report to the credit bureau.
Okay.
So you don't have to say, oh, I can only spend $90 on this card. If you need
Mm.
to go spend $800, that's fine. Just make sure you make a $700 payment, by the statement date. And if you want to know when your statement date is, usually your credit card app will tell you. You can make a simple phone call to them. It's a 5-minute conversation. And I would write down or put in my notes on the phone what the statement date is and make your payments by the statement date.
Mm. That's some serious value. And so as you're talking about this, I really want to dive in to some other things, but let's hang it on real estate here for a little bit longer. So someone's trying to buy a house and they got their mortgage officer who's helping them. And they are taking care of their credit, debt to income ratio and all that stuff. And then all of a sudden some major bill comes up. And maybe this is a better question for a mortgage officer, but I'm curious to know what you think. Do I use the credit card to go ahead and pay for this? Let's replace the air conditioner, $5,000, right? Or do I use cash and now I have less in my reserves that the bank may want? Like, is there any way you can use a credit card and not affect over like maybe a 2-month period, or maybe spread it across other cards, get a specific type of loan? What's your like hack for that?
Sure. So that's a good question. So obviously, full disclosure, I'm not the mortgage lender, right?
Right.
Everybody has a different opinion on this. But coming from the credit guy, what I would do in that scenario is either split it between cards or use it on the card that you get or you have the highest limit. And this is why I'm telling you, if you can get between that 1 to 9%, and then you need to go replace the air conditioner and you swipe the card, it's not going to hurt you as much as if you were already using 28%.
Mm-hmm.
Right. So of
Yeah.
course there's to be technical, there's so many factors, but I always say use your credit card rather than getting a loan, especially if that card has cash back. So even with the smallest purchases, if I'm going to go buy a soda from the gas station, I'm using my card, my cashback card. I don't care if I get 2 cents back, because why not make money rather than use my debit card? And again, to be specific and put it into real estate, running another scenario, well, what is that customer's current DTI measured at? Is that riding the line? Because usually DTI is going to not only control the approval, but how much they're approved for. And
Correct, yeah.
I'd rather them keep the money in the bank and use the credit card, because when you take the money out of the bank, that's going to be an immediate notice that the balances have changed. When you use your credit card, you have 30 days to go pay it back down and make it manageable without ever hurting, what you have available to spend.
Good stuff. Good stuff. I want to mention before I forget, you guys, Dylan's book here. We did mention it in the beginning, but I just want you guys to kind of get a visual here. Let's go ahead and share my screen. Looks like you can get it on Amazon, or
Yes.
this is Alvarez, but you can get it on Amazon, I think, for $10. But here's a good picture of it here. We'll go on to some of the other questions I have, but what sparked you to write this book?
Yeah. So one of the major reasons that I wanted to write the book was because I can speak all day long, but I can only touch so many people with the information, right? So, I mean, I've made videos, I've done things like this, and I do a lot of presentations in person. However, that limits my ability to deliver the message, which is educating people on how credit really works. Because I don't want to offend anybody when I say this, but I can't tell you the countless amount of people that are either a loan officer or they work at a bank. They're what I call the front line, but because they only know so much about credit, they could be unintentionally giving the wrong information to clients, right? So my job here over anything else is to educate and empower people about how credit really works. And if I can give that knowledge to as many people as possible, you know what that book can do? That book could be given to a child. That book could be given to a brother or sister. That book could be given to a cousin in another state. You know, it can be given to people where the message can be spread faster. And all it is education about credit, because we're not taught about it in school. We're not taught about it at home. We're not taught about it in places. So where are you going to learn about it when it's too late and you realize you need it to buy the home? That's not good enough for me. So that's why I want to spread it.
I love it. I love that explanation. And so a couple of things, because there's all these ideas and questions coming to my mind. I want to keep it somewhat focused here. We're going to keep this less than, half hour. Yeah. Some people are asking some questions, pretty generic questions, but still we can get to them. What's the biggest factor that affects my credit? You were saying so far we've went over roughly 60%, right? Debt to income, or not debt to income, the utilization rate and
payment history. So it's a total of 65% influence. Your credit cards have a 65% influence of your score going up or down because they report payment history and your utilization balance.
And so if you just focus on those, or at least to fix your credit, that would be a good place to start.
That's fine. Go ahead. I was just making sure the kids were quiet. I didn't want it to come in the background.
Yeah, no, you're fine. Yeah. So that would be a good place to start. Let's transition into what I think is cool.
Sure.
Okay. So, and I want to know what you think, because I've done a lot of research when it comes to credit when I was fixing my own credit. And there's a couple of things that are very unique, very interesting to me. I want to know how, first of all, are they legal? And if they are, what is the best way to do it? So one of the things, and I paid for some of this stuff too, so I won't tell you how much, but so one thing I learned, Dylan, was manufactured spending. Essentially, credit cards give you huge bonuses for spending more money, and the idea that you can buy a Visa credit card and turn around and you bought the card for $500, let's say, and whatever kind. I'm not even going to mention a card name. I don't want them to reach out to me. But then you go ahead and use something like Bluebird or one of these other websites to then upload that money and pay off your card. Is that an effective strategy? Is it legal?
Yeah. So I'm glad you brought that up, because there's a right way and a wrong way to do everything. Now, the simple answer is, in order to build your credit, especially if you are somebody that has limited to no credit, right? The reason that it's important to have these accounts like this to report to your credit report is because you need to show payment history. Now, there are, again, here we go again, unmoral and unethical ways of doing this. We will not do it, by the way. And I'm not saying it just because I'm on camera. Anybody can ask. We've had clients ask us, can we buy a trade line, which is essentially paying somebody to be added as an authorized user to their credit card to show payment history. That is a free service. Only do it with a close friend or family member, because with payment history being the number one influence to your score going up or down, the simple way to drive your score is to have more positive payments than negative things happen. You want more positive than negative. That's what drives the score. Because at the end of the day, your credit report is just a way for a future lender to assess your risk level, right? So if we can show more positive payments through revolving accounts like credit cards and store cards, installment loans like an auto loan or mortgage, now you can even report like your rent. You can show rent payments up to 2 years. You want to establish positive payment history. Now, when it comes to some of the other methods that people use, if you have to add, this is my measurement of what I'm willing to do or not. If you have to ask if it's the right thing to do, then that's your answer, right? If it sounds questionable, then you already got your answer. And there are quick fixes that are out there, but that is all they are. It's putting the Band-Aid on the bullet hole, right? So if you take the quick fix, you won't have permanent results and you can find yourself in a lot of trouble. For example, there are terms called credit sweeps where they will sweep the entire report. You can go apply for your funding, get your mortgage. But then what happens is most times lenders are pulling your credit again, or they can audit the file. Now,
Right.
if new accounts or old accounts come back on that were not there before, you have just now committed mortgage fraud and can get your house repossessed just like you can a vehicle. All
Yeah, and
over trying to
that's
do a quick fix.
yeah, definitely when it comes to mortgages, one of the things we learn in real estate school is disclose, disclose, disclose. But when it comes to credit, what I've noticed and some of the stuff that I've learned is very interesting is the rewards you get. And I think so here's the thing. A lot of people look at their credit as almost like their taxes or some of these other things. It's just a boring thing I got to do once a year, or I got to do it every couple of years, for credit. But the reality is it can be kind of fun. You get some credit cards that that give, like you were saying, give you these cashback things. If you get, I got the Southwest card, it gives me just like
Great card.
insane. It just gives me insane cash back, and then points on flights, and then so anyway, to my point, you can actually transfer as you start doing this. And I haven't gotten this far yet, but this is my goal, Dylan. I'm curious to hear what you think about it. Is like get to this like platinum member status with American Express, so that you can call these other card companies and be like, hey, I'd love to move over to you and spend my $5,000 a month with you. And you didn't even have to earn that status with them, because you have the status with the other card. They just give it to you sometimes, give you the free upgrade in the room, give you the free upgrade of the car. That sounds fun to me.
Yes, it is. I actually have. So here's the simple statement. Credit cards are not the devil. Okay. Some people think that credit cards are bad.
Right.
Now, again, we only know what we're exposed to. Growing up, our parents used to tell us, you pay cash for everything. If you can't pay for it X amount of times, then don't buy it, right? Don't use your credit cards. That's the emergency fund, right? That's the when you don't have it, but never use it if you have it in the bank. It's not true anymore, right? That was never a thing that was true. Because if you have a credit card company that's willing to pay you to use their money, use it. Right? Like how you were saying Southwest, most times they give you like 60,000 bonus points. And they're a phenomenal card. Now you're stacking free plane tickets, right? I have a lot of cashback cards. Actually, one of my cashback cards pays one of my employees' salaries. So I actually use that money to go ahead and pay one of my employees. It covers their salary. And then I have a second cashback card that's very high just because of my status and how much I'm using, that it gives me enough cash back that I cash out the cash back to make the payment on the card. So I'm swiping with their money. And then when they say, hey, Dylan, it's now your turn to give us our money back, I give them their money from the cash back to pay their money back.
Yeah, a lot of people, that discourages people. My girlfriend, we were looking at cards, and she's done really well with credit. And I'm like, hey, you should get this card. We're looking at like a $500, yearly fee, annual fee. And it was like, she's like $500. I'm like, yeah, but are you going to use it? And are you going to get the cash back in order to be able to pay that off? And then plus all the benefits that you're going to get. Here's the thing. If you're going to spend the money anyway, why not spend it through the card?
Exactly.
Make sure you pay it off every month. And then, okay, so one question, because we've been beating up on the percentages. Should you always pay it off every single month, or should you actually leave some on there? Does that affect it at all?
Great question. You should always leave a balance. Even if it is 1% of the limit, leave a balance. You will actually have a higher score with leaving 1 to 2% balance on there than paying it off for zero. Because what happens is if you carry a zero balance, here's a couple negative things that can happen. One, they're not going to report an actual on-time payment made month after month if you have no balance to pay towards. And then as the months go by, some credit card companies can be as short as 3 or 4 months, where if you're not actively using the card, well, they can either decrease your limit, which hurts your utilization, or they could completely shut down the card. right? It happens
Mm.
all the time. And the reason you don't want to close a card, by the way, if you started building credit and you have a secured card, or you're tired of the interest rate and you're tired of the fees, do never close out the card,
Right.
because now you're going to lose out on the benefits of the payment history. It doesn't report as an active account.
Right.
The reason why active accounts are important and having multiple is, think of it like this. If I asked you to borrow $5,000, the first thing, if you were even going to consider it, is you need to ask people that you trust to see if I'm good for it. Your credit report is your reference sheet. That is a list of people that the lender trusts that says, has he been good? Does he consistently miss payments? Does he rack it up and not pay it back and do minimal payments? Are we making money on this client? Did he default? Did he go into collections? It's your report that shows how good or bad of a borrower you are. So having multiple lines of active credit is huge. And we tell people this in the credit repair process. We will handle trying to remove as many of the negatives as possible. We're going to educate you along the way, teach you how credit works. We're going to give you tips and tricks and little hacks, like how we were talking about the credit card hacks and cash back and benefits. And then we're going to help you build and establish new lines of credit. We're not going to just tell you what to do. We're going to walk you through based on your report. You get a tailored service that says, based on the details of your current report, here are the things that are going to benefit you the most. Right? Which is huge, because credit repair companies do not do all of that. They usually carry the first step, which is you're paying us to challenge negative items, right?
Mm-hmm.
That is the bare minimum for us. That is the first of 3 steps we take, because without having multiple lines of active credit, it's not going to help you by removing the negatives. Think of driving a car, right? You got the gas and the brake. So all of the negatives you have, you put your foot on the brake harder and harder with more negatives, right? It's bringing your score down like it's bringing your speed down. Well, what happens if you just let off the brake? You don't hit the gas, you just let off the brake. You may coast a little bit, right? 1 to 3 miles an hour, which this is comparing if we just remove negative items without adding new ones. Right?
Mm-hmm.
If you just remove negative items, you may see some traction, but you're limiting your potential to have a high score. Well, if you add a bunch of positive accounts that are active, now you're putting your foot on the gas. What happens when you put your foot on the gas? You go faster. Same thing with your credit. The more active positive accounts you have, you're hitting the gas pedal, which will drive your score higher. But if you only remove negative items, and that's you getting off the brake but not applying the gas, you may see something, but you're not going to get to your maximum potential. Does that make sense?
It does, yeah. And I love, with your book, I was thinking about this, with your book, you got 3 different guys. Who are these other guys? Are these guys that other credit guys?
Yeah, so those were 2 people that ever since I was, I don't want to say growing up, but from like 18 on, as I guess, as I was growing up in my entrepreneurial journey, right? Like becoming an actual business owner, we have even taught a credit class together, and they have years of credit experience. And I was actually one of the people that have taken a class from them back in it was like late 2016 or early 2017. And they were the people that I learned from with some of the basics of how it worked. So, with me, with my age, a lot of people can not discredit, maybe that's not the right word, but discount it, because they're like, well, what's a 28-year-old kid going to tell me at 45 years old about credit? Well, guess what? With all due respect, in a non-cocky way, I can go buy whatever I want with my credit score. So I understand it. I've went down in the trenches. I've made my mistakes, and I've brought myself back up.
Well, I think having these other 2, what I was going to say is if I was going to write a book about real estate, I think I have a lot of knowledge that I could get pretty far. But imagine taking a couple other guys and having this little mastermind. And so I was thinking, I haven't read your book yet. It seems like a really cool book. The design's pretty cool with the gold and black. It matches my brand here. So I just want to say, anybody who's watching, if you guys want a copy of Dylan's book, comment below. I want a copy, and we're going to randomly select somebody below to go ahead and mail it out to you. So you got to comment below. even if you're watching the replay, I'll check it on Friday. Comment below. I want a copy, and let's get your credit all fixed up. And thanks, Dylan. Listen, hey, also, so one of the things with credit and with buying a house in general is that people get in this like low, I don't know if it's limiting belief, like the household I came from, and sometimes they'll have a 700 credit score and they'll have a good job and they'll have 10 grand to put down on a house. And they're like, I don't think I'm ready. And it's like, well, how long have you been at your job? And we have this conversation, and it's very clearly a limiting belief. With credit, I think it's very similar and sometimes very much a part of that. What would you say to somebody who has a 400? Well, let's say, have you seen anyone with a 300?
Yeah, not a 300 even, but the lowest
Okay.
I've seen was a 387.
I was gonna say, if you're like 300, you must have like killed somebody's mom that worked at the credit bureau.
You had to try hard to do that. If you would apply that same amount of effort in the opposite direction, they'd probably be an 850. Like you have to intentionally try really hard to get there.
And have you seen an 850?
Yes, I have.
Are you an 850?
So believe it or not, there's also, just to put it out there, in the FICO 9, right? Because there's FICO 2, 4, 5, 7, 8, 9, and 10 and 10T. In the FICO 9 method, it can actually go up to a 900. And when I went to apply, when I got the house in San Antonio, I had to like set up like AT&T and stuff like that. And they actually send you a copy of your credit report. And they said I was an 872, according to them. So, and they use the FICO 9 method. But for me on the FICO 8 side, the last time I checked was an 835. So I'm not perfect, but it is up there. It's pretty beneficial.
Well, and here's the thing is, like, I know some people who have great credit. It's like 800s, and stuff, or 790, 780, and they do everything right according to some people. But one of the credit guys I spoke to said, well, she had like 8 credit cards. He's like, you need like 25, 25 accounts and minimum. And I was just like, how do you spread 25 cards? I mean, I would get lost.
No. I mean, here's the thing. Every single credit profile is different. And the simplest way to say it, believe it or not, is the score doesn't matter. It's the details of the report. So for example, you can send me somebody that is a 750, right? They would qualify for all types of loans. They can go conventional. They could do whatever they want. And that 750 still may not get approved because maybe it's a 19-year-old kid that was just an authorized user on 2 or 3 of his parents' credit cards and doesn't have actual payment history showing his ability to make that big of a lump sum payment. Right? So credit diversity is actually a 15% influence of your score going up or down. Somebody with 5 credit cards versus somebody with 3 credit cards, a mortgage, and an auto loan will have 2 different scores. The person with the more diverse types of accounts, the more diverse credit, will have a higher score than somebody with just 5 credit cards, because that's only showing your ability to use revolving credit and to manage that. But if this is your first installment loan, like let's say those 5 credit cards total $20,000 in limits. That's great. You can manage that. But if you never had an installment loan, how are they going to measure your ability to make a mortgage payment of a $300,000 house? Because there's nothing in your report that says you've done that before. And all your credit does for you is show your experience to the lender. Think of it like this. I told you I'm a big analogy person. So let's say if your roof is leaking, right? You get one of those really bad storms, your roof is leaking. You have 2 people that are available. You can call the guy who's been fixing roofs for 5 weeks, or you could call the guy who's been fixing roofs for 5 years. Who are you picking? You're going with the guy for 5 years because you naturally feel more comfortable because they have years of experience. Well, that's the same thing lenders are thinking before they let you borrow their money. How many years of experience do you have managing multiple different types of accounts? It doesn't mean you need 25. Right. But, depending on your age and previous history, sometimes you just need 2 or 3 extra, or maybe you do need 6 or 7, but it doesn't all have to be credit cards because the details matter more than the score.
Okay. Yeah, diversification. I like that a lot. So before I forget, let's go back to the guy who's got 300, 330. Does he
Yeah.
have any hope at all? I mean, and maybe just touch on like, how did he get that low? Could it just be one credit card that you didn't pay and then and it just slowly over time went that low? I mean, what
So
do we do?
there's two types of people that fall into that category. There's either the 18 or 19-year-old kid that has never had credit before, but
Yeah.
somehow has found some medical debt or negative things like that on his credit report. And that's why. And most times they're getting that credit score from Credit Karma, right? So
Uh,
here's a little fun fact. So how to accurately measure. If you ever come across somebody that says they're in the 300s, 400s, or even in the low 500s, and they tell you that it's coming from Credit Karma, the next question you ask them is this: do you have any active lines of credit? There is a over 90% chance that the answer to that question is no. And if not, that's okay. That's actually a good thing, because most
mm,
people are finding this 300, 400, 500 score on apps like Credit Karma or Credit Sesame, somewhere where they're getting that free
mm,
score.
mm,
So because of the Vantage Score scoring model, it tries to give them something. It does account the medical debt and the negative collections to try to generate a score.
mm.
Now, if we were to pull their FICO scores, they're going to be what's considered that credit ghost, right? They're going to have limited, or they're going to have no credit. They're probably going to have a 0, or sometimes it comes like 9,003. It like looks like weird codes for the credit scores, right? So
Wow.
those customers are my absolute favorite, because all they need to do to change that no score or that 300, 400, low 500 is just get a couple active lines of credit. Well, Dylan, if I have that low of a score, how am I going to get anything? Well, this is where we would make the recommendations for specific secured cards or credit building things they can do. So then that way they can generate some payment history. And in about 2 to 4 months, they're going to generate a score. But guess what? When they do generate that score, it's definitely going to be in their favor, because they don't really have much of anything happening. If
Right.
we were to challenge and remove, say, that medical debt or whatever small collections were in there, or sometimes the parents using their kids' social. If you're a parent, please stop using your kids' social, because you're hurting their credit when they get older. I've seen it
Yeah.
plenty of times. So in that case, all we have to do is challenge those small couple things and let time go ahead and build and establish that credit score. Again, you're getting a
Yeah.
couple, on-time payments, and if we're clear of everything else, that person can take that low 300, 400, 500 score and now see themselves in the mid to upper 600s, maybe even close to 700 in anywhere from 2 to 5 months.
Wow. Yeah, that's amazing. And so how about the guy who's got just kind of like, 500 and he's trying to get approved for a loan, like with similar advice, get some other credit cards, pay down stuff. I mean, everybody's going to be a little bit different, but
Yeah.
I guess what is our hope building thing? Does he have hope?
Yes, absolutely. I am somebody, and maybe I'm very optimistic or whatever, but I truly believe that there is not one person on the face of this earth that if they can give me similar commitment, that I can't help. There's
Mm,
nobody here that I cannot help. The only time I cannot help somebody, the only time where they will lose hope, is if they expect to hire us and then think magic is going to happen and then the scores go up. Because I am not here to sell time. I am not here to sell a pipe dream or something to be misleading. It's going to
mm,
require, our relationship is going to require work on both ends, right?
right.
So I'm going to do a lot of the tedious stuff. I'm going to make sure we're cleaning up the negatives. You're getting educated along the way. My only ask is, when you start seeing your score go up, don't go try to apply for the car. Don't go to try to apply for those things and add additional inquiries.
Yeah.
Trust me and wait. If I ask you to apply for something, go ahead and do it. I can almost guarantee the approval, because I'm making specific recommendations, right?
Yeah.
So being my business the size that it is, and being in 23 states, we have a lot of relationships with a lot of different banks and credit unions that, even on the unsecured side, can almost give us guaranteed approvals just because of our relationship, because of how many apps I send them per month to help people build and establish new lines of credit, especially veterans. Like, I have a huge, and being one myself, I have a huge relationship with Navy Fed. So I can take someone that's in the 500s, and knowing that Navy Fed Credit Union has their own internal scoring model based on their relationship with them, I can make a lot of great things happen. Even if you're not in the ideal situation, like that client that may be in the 500s, like you were saying. Simple. Every credit report is different. You can give me two people with the same scores with completely different details. But the big differentiator for us is we are not a one size fits all. We're going to analyze your report. We're going to share all the potential opportunities we see. And then we make a tailored plan of action on how both of us are going to execute. And if we stay on the time frame and keep executing together and working together, it's impossible for that score to not go up. I don't care if there's a bankruptcy and 2 auto repossessions and 40,000 in medical debt and student loan debt. I don't care if it's all in there. There is nothing we can't do if we're working together. And that's my biggest thing.
I love it. Yeah. And that's the thing is like anytime you think it's impossible, then you go and you do something. And then it's like, it's not pie in the sky stuff. Tony Robbins isn't here today. And I love the guy, but it's not. And if he was, he would be like, yeah, let's start,
Yeah.
So good stuff, Dylan. I appreciate it. How can everybody keep up with everything you have going on? I know they could go get the book. Definitely hope, people comment below. I'm going to send out at least one copy to somebody. I'm going to buy a copy myself. And then, but how can we keep up with you?
So the best way to do it is follow my social media. That is the biggest thing for me. So my website is also another great way. If you go to www.jwgroupinc.net, I know it is below. I just noticed it there. So if you do follow it there, that's a great way to check out more about what we do. There's a tab in there that says get my quote. By the way, consultations are absolutely free. We don't charge anybody for consultations. I'll talk with you till I'm blue in the face. It doesn't matter. I really love helping people and teaching them how this really works. So even if you just want to have a conversation and you say, hey, Dylan, my credit's good, but I want to go from good to great. Like, you don't have to have bad credit just to work with us, right? If you want to go from good to great, we'll help and coach you through that too. But social media is going to be the biggest. Facebook is huge. If you just search my name, Dylan Shively, it'll pop up. You may see 2 pop up. There's a personal and there's a business. I would say go like the page of the person or the business one, just because I think I feel bad. I'm sorry. I delete people probably daily to try to make room, but the friends thing is maxed out. And I don't want to lose an opportunity for us to just be friends or for you to follow, what we do or the free information I post on my Facebook for you to use. So go ahead and at least minimum like that business page because I'm always posting free information, tips and tricks on how credit works, things you could do to boost your score in 30, 60 days, all free information just to help people who are following along.
Very good, man. I love it. And listen, you guys, Dylan was personally recommended to me by a close friend, and I'm just so grateful that you're able to come on and actually share this stuff. I know you've been on all these different channels and different things, and it's always good to have somebody come on that's actually an industry expert. You're the average of the 5 people you spend the most time with, and today you hung out with like a top credit guy and then me. So you at least have one person that you at least are elevated by Dylan here. And so if you guys have any questions, comment below, reach out to Dylan. If you're looking to buy or sell real estate in the Orlando or anywhere in Florida, as a matter of fact, reach out to me. I'll put the number in the description. Hey guys, if you're watching on YouTube, you got to subscribe, hit the little notification bell so you know exactly what's going on. And of course, now we're live on LinkedIn, and LinkedIn is always wanting you to promote that. So if you go on there and just comment something, they're going to love that. And Dylan, thanks so much, man. I appreciate you coming on.
Thanks for having me. I really appreciate it.
All right, guys, we'll see you on the next one.
Take care, guys.
Thank you for watching another episode of the Mighty Mike Show. Tune in Monday through Friday at 3 p.m. Eastern Standard Time. And don't forget to subscribe, rate, and review the podcast. Leave a comment below and let me know what you would like to hear discussed on the Mighty Mike Show. See you next time. Mighty Mike helps you buy it right and sell without a fight.